Good afternoon. I'm pleased to be here to talk about Esperanza Resources. We are a development stage company progressing the Cerro Humil gold asset in the Mexican state of Morelos. The asset itself boasts over 1 million ounces of gold, and we have $43 million in cash to progress the project. It is envisioned to be an open pit heap leach project. The last 12 months have been exciting for the company as we've hit a number of key project milestones. In September 2011, we announced a preliminary economic assessment on Cerro Humil. That study outlined annual gold production of over 100,000 ounces at operating costs of around $500 an ounce. It was based on the September 2010 resource statement and outlined a 6-year mine life. Subsequent to 2010, we've done over 20,000 meters of drilling that will be incorporated into a new and improved resource that we expect to announce shortly that will hopefully support a longer mine life. In May of this year, we did a concurrent financing and management reorganization. We brought in a proven executive and mine operating team and raised money, all designed to fast-track Cerro Humil towards production. The financing itself was announced at $10 million and upsized to $34 million on the back of overwhelmingly positive demand. As I mentioned, the new team that we brought in May, designed to fast-track Cerro Humil to production, is a team of engineers and executives primarily based from the mine finders. Greg Smith, our CEO, leads the team as a chartered accountant by background and was a CFO of mine finders. Lawrence Morris is the key man in engineering. He's the COO, and he was primarily responsible for turning around the Dolores operation, leading to improved recoveries, decreased dilution, and ultimately led to the sale to Pan American of mine finders for $1.5 billion earlier this year. Lawrence brings with him a number of key individuals in engineering and permitting in our development team in Mexico. It's very rare that we're able to take an entire engineering team, transplant it from an operating asset that was Dolores, and bring it on to a development-ready asset, which is Cerro Humil. Bill Pincus, the former CEO, remains involved with the company, has stepped up to become the chairman. The project itself is located in the Mexican state of Morelos, approximately 30 kilometers south of Cuernavaca. It is 100% owned by Esperanza, subject to a 3% royalty. There is excellent infrastructure, the project is easily accessible, and the community is very safe. This page highlights the results of the PEA announced in September 2011, notably the 100,000 ounces of annual gold production and operating costs of around $500 an ounce. Again, as I mentioned, it's based on the resource shown at the bottom of the page from September 2010. Our new resource, which will be coming out soon, should support a longer mine life. And we'll see an increase, particularly in silver, as we incorporate a previously reported separate silver high-grade zone. One of the things that attracted us to the project was the flexible capital. The PEA contemplated two scenarios, 100 to 150 million in total capital. Those estimates included $45 million in a company-owned truck fleet and support equipment scenario, highlighted in blue on the chart. Our intention is to go into production on a contract mining basis, which will eliminate those costs. There will be a corresponding increase in our operating costs, but going contract mining will allow Esperanza to go into production on a quicker timeline and with less upfront capital. Other options that we have to restructure the capital are to defer the crusher and restructure the heap leach so that we can pay for it out of cash flow. We're currently undergoing met tests right now, a 70-ton met test run by Lintech and McClellan Labs to evaluate the benefits, if any, of a crushing system. We're also evaluating going run-of-mine, one-stage crush with a simple jaw crusher, or a two-stage crushing system. With respect to the heap leach pads, we can stage them over the course of the mine life as opposed to building them all up front. Right now, we have $43 million on hand to advance the project. In the first half of 2013, we'll look to raise an additional $35 to $40 million. Our two primary alternatives for that right now are simple debt financing or a silver stream transaction. We've initiated discussions with a number of banks, received a lot of interest, and a number of banks have already been to site. These banks will be reviewing our detailed engineering in Q4 of this year in advance of the bankable feasibility study expected to be released in Q1 2013. With respect to the silver, it currently represents approximately 4% of our revenue and is a $40 ounce cash cost credit in our operating costs. There have been a number of recent notable silver stream transactions, including Inmet's $1 billion deal on Cobre Panama and Hudbay's $750 million with Silver Wheaton. We've received inbound interest on our silver, and we may consider monetizing that sometime next year with a resulting focus of Esperanza increasing our leverage to gold. The deposit itself is shown here with the 2010 resource footprint highlighted in gray. One of the things our new resource will incorporate is the west zone, which brings with it a higher silver component. The best, most attractive extensions of mine life lie in the southwest, where drilling has proved that mineralization is open. We have a 5,000-meter drill program planned for 2013 in which we will pursue this southwest extension to hopefully further increase the mine life. In terms of moving forward, our next critical path is ratifying a surface land agreement in Q4 of this year. We have a great relationship with the community and have been operating under a long-term exploration license. We'll look to move that into a full mining license and ratify that in the next couple of months. The permitting process has already begun. Earlier this year, we received permits from the Federal Ministry of Archaeology and History with that regard, and that will be part of our broader environmental impact study that will be submitted late this year. That is generally a 6 to 9 month process, and we will hopefully receive our permits sometime middle of next year. In the meantime, as I mentioned, there will be a bankable feasibility study coming out in Q1 2013. Upon successful receipt of permits, we expect a 6 to 9 month short construction period with production beginning sometime in 2014. This page highlights a long list of attractive points that really attracted us to the project and was the reason why the financing in May was so oversubscribed. Cerro Humil is a low-risk conventional operation, simple open-pit heap leach, which is defined by low capital and robust economics. We have excellent community support and a team in place to deliver Cerro Humil to production. Esperanza's other assets are headlined by our 26% interest in Global Minerals. That value is currently worth $12 million in equity value. Global is advancing the Straborna underground mine rehabilitation project in Slovakia. It's highlighted by high-grade silver and high-grade copper. Currently, there's resources of approximately 30 million ounces of silver grading 230 grams per ton and 80 million pounds of copper grading 1.1%. We are excited to watch Global progress the project. They're well-funded with over $10 million in cash and are driving towards a PEA on the project. This is a common graph in the mining industry that shows the life cycle of a mining company. We highlight where Esperanza is right at the value crux, where we can begin to de-risk and deliver value in the short term with this project. As we move into permitting and construction and ultimately production, we'll be driving towards cash flow, production, and ultimately higher valuations. The economics of Cerro Humil are incredibly robust. This chart shows the after-tax NPVs and IRRs at various gold prices. At a modest gold price of $1,250 an ounce, the NPV exceeds $165 million with IRRs in the mid-30% range. In the current gold price environment, the NPV exceeds $300 million and the IRRs above 60. Now, these figures are based on the preliminary economic assessment in September 2011 based on the 2010 resource. Any increases to our resource should hopefully support a longer mine life and improved economics. This is another way to look at the same figures with Esperanza's total enterprise value shown at the bottom of the graph. With our enterprise value is currently around $50 million and the NPV is significantly higher than this, we see a lot of room for us to move up the value chain as we de-risk and deliver the project. To conclude, Esperanza, we have a great asset, we've got a great balance sheet, and we've got a great management team and operating team in Mexico to deliver the project. We're rapidly driving towards production. We see significant upside at the asset in terms of mine life and quality. Capital costs can be restructured and are very flexible. This is a low-risk, high-value equation that we have here, and we're excited to be driving it forward. Thank you.